The following video is only the creator's own view and should not be considered as investment advice. Hey, welcome to Losing Money with Ken, where I try to get rich or die trying. In this video, I will show you how you can reduce your mortgage by $2,000. So if you have bought $1 million property and if you're already stuck in a shitty unit and can't climb out, then this news came from Straits Times recently. MAS warns Singapore household on rising mortgage debt ahead of potential interest rates hike. This seems like a warning that came too loud and too late. With the recent records of multiple million-dollar HDB, those who have not been affected by structural employment issues have already tried their best to sustain this slow property boom. As they say, after you reach the peak of a mountain, it's only downhill from there on. Okay, I'm here to help and not be a shill that keeps screaming, the market is falling. Now what if I tell you there's a way to reduce your monthly mortgage payment by $2,000? So now imagine if you have $1 million loan. Let's assume the first interest rate benchmark jump is from 1.2% to 2%. The monthly payment will go from $3,300 to $3,700. Well, everything will be fine until it's not fine. If shit hits the fan and your family's income is unfortunately affected by the same reason that causes the interest to rise, good luck to you then. So how can we cut the $3,700 payment to just $1,700? In short, you'll be asking the bank to help you get a mortgage holiday for the principal portion of your loan. So every month, you will only be paying the monthly interest portion for your loan amount of $1 million, which at 2% will be around $1,700. But this only happens if you're a good banking customer and have been servicing the loan perfectly. Also, the reason that you're suspending the principal portion should be a short-term financial difficulty on your side. For example, a temporary loss of income, cash flow issues due to difficulties. The ideal reasoning is that you wish to sell the property and have difficulty serving the full mortgage payments. As the property sales will be months in the making, you wish to stop loss on the payments as you have difficulty in servicing the loan and not let the property go as a fire sales. But do note that this payment can only be made in cash. You got to be able to identify your situation quickly. When you're unable to sustain the property, you have to be the first to sell on the market. You will be able to bail out quicker because if you have lived your life as a responsible person and you're in a not so nice situation, it would be very likely many are just holding on with their grip slipping too. The HDB upgraders narrative has run its course. Those that have the ability to upgrade will have done so in the last 5 years of prolonged rising property prices. So now the situation will be tighter for those who have over-leveraged. Do post your questions and I will try my best to answer them. That's all for this summary. Please help me by clicking like for this video and subscribe to my channel, Losing Money with Ken.